Cashflow Diary podcast, episode 547.
Welcome to yet another exciting episode of the Cashflow Diary podcast, the podcast that teaches you insider tips, tactics, and strategies for creating leverage streams of cash flow into your life. Learn from top-performing entrepreneurs, business owners, investors, and thought leaders from across the globe as they share their secrets to success. Like what you learn on this and other Cashflow Diary podcast episodes? Go to learninvestingnow.com and sign up to receive powerful tips and information that will help you succeed as an entrepreneur and investor. Now, here's your host, investor, entrepreneur, business owner, educator, speaker, author, and master facilitator of Robert Kiyosaki's cash flow game, Jay Massey.
All right, ladies and gentlemen, welcome back to another episode of the Cashflow Diary podcast. I'm your host, Jay Massey, and I'm glad that you are here today because when it comes down to it, you and I, we're out there building our businesses. We have ideas. We're trying to execute them. And many of us, yes, we're building portfolios of real estate property and various other assets. What it comes down to, though, is that oftentimes we don't have 100% of the capital that we need. We sometimes are looking for assistance. And if you guys are like us, you get creative. What I mean by this is maybe you've been taking advantage of the opportunities in the real estate space like short-term rentals. And now you're like, man, I have a portfolio of 10, 20, 30 of these. I'd love to start buying them, but I'm having trouble figuring out how to actually finance them without having 100% of the capital. We're going to talk about a lot of things today, and I think every one of you listening will not only be able to benefit, but will find encouragement at the end of that rainbow because we're going to talk to a man with the money. Of course, I'm talking none other than Mark Ritter. He is the CEO of MBFS and is an expert in credit unions and business lending. Now, stick with me. I know one of the questions you just said is, Jay, what's a credit union? And why is a credit union different than a bank? And you know what? Mark is excited to let us know that difference too. In fact, it's one of those things that sometimes you could be in a great business and the biggest thing you spend your time doing is educating people on even what it is, why we should seek you out. So here's what I want you to do. I want you to make sure that, yes, maybe you're walking the dog, doing the dishes and all that other stuff, but now it's time to pay attention because this unlock that you are about to receive could be the very thing you need to know in order to get your business to the next level. So do me a favor. Let's get ready to listen, love, and learn from Mark Ritter. Mark, how you doing?
Pretty good. Thanks for having me.
I'm glad that you are here because, well, as you probably already know, we have a very basic question for you, but I've got some exciting stuff that I want to ask you as well. Now, before we do that, though, because this is the first time that you're here, I have to ask you the same question I tend to ask everybody else the first time that they're here. You ready?
Yes.
Okay. I tend to look at today's entrepreneurs a lot like yesterday's superheroes. You know, Batman, Robin, Wonder Woman, Spider-Man, etc. Because I think entrepreneurs and superheroes have a ton of things in common. For example, if you think about, I don't know, Spider-Man. There was a time where he was just a kid, going to school, doing his thing, taking some photos, hoping to have enough money to, you know, go outside and take Mary Jane on a date. But then one day he gets bit by, you know, a spider, discovers he has a superhuman ability, and now he's presented with the choice of whether to use it for good or for evil. So my question to you is as follows. Before being an expert in credit unions, business credit, lending, all the things that you do, before you even got started, what we want to know is, who is Mark Ritter?
Interesting question. I always tell people I am a blue collar guy in a white collar world.
Okay. That's a good start. I'm listening. Go ahead. What do you mean?
I grew up in the coal regions of Northeast Pennsylvania. And the last thing I ever thought about when I was a teenager was sitting talking to somebody like yourself today, yet alone being the CEO of a commercial financing company. Where my background is if anybody has ever seen the movie All the Right Moves with the old small town coal region football town, that was me. I grew up in a town, Berwick, Pennsylvania. And Berwick is known for one thing, having a nationally ranked high school football team in this little small town in the middle of nowhere.
Wow.
And I was fortunate enough, by just happenstance for growing in this town, someday I was probably the most marginal high school football athlete ever, but was given a job opportunity to go work for the Penn State football team, which I never imagined in my whole life something like that could happen. And without that divine intervening hand, I would probably still be that small town guy sitting up in the coal region doing who knows what. But from there, I was able to go to college. I wouldn't have had the opportunity without that job. I was able to travel the country and make lots of friends, connections, and see this whole new world that I was able to. And it just kind of snowballed into where I am today. And I really have to thank football and the people and mentors and coaches for giving me an opportunity to grow. So
interesting. Now that's got to be the strangest entry into finance that I think I've heard in a while.
Yes.
So I would love to hear a little bit more about the journey, because again, when we're talking about like superheroes, there's this point where they see themselves, they are a normal human being, normal person. There's nothing special about me. Then this intervening event happens. But also there's this transformation. There's this point at which they realize, or even you realize that, oh my gosh, I have something special and now I can offer it to the world. Okay. But how did you discover that was there for you?
I remember growing up as a kid where my father used to talk about the credit union. Mm-hmm. And the one thing that he used to say is, my credit union is always there for me when I need something. And that always stuck with me. And when I was older and started looking in that career path, and I was fortunate enough to graduate, I did well from school. And when I turned down from other opportunities to stay and started looking in the credit union space. And at the time, this was a new venture. When I really first got into credit unions, in the entire state of Pennsylvania, there was maybe $12 million among every credit union and business loans in the entire state. Now there's over $2.5 billion.
Wow.
And I consider, when you talk about superheroes, I consider myself like Aquaman.
Aquaman?
He has superheroes powers, but you don't really see them, and not that many people really know what they are, but they're pretty good when you need them.
That is an accurate description of Aquaman for sure. I can't wait to tell my wife that you said that you see yourself like Aquaman, because that's pretty funny.
I have all these superpowers, but nobody can see what they are just by looking at me and talking to me.
Well, and this brings up a good point, because that I've heard the words credit union. And your dad said something that I find very interesting, that the credit union is always there for me. It's rare ever that someone says, I've never heard anyone say my banker is always there for me. But I'm curious to know, because then that says to me that if that's the kind of relationship that your father was able to forge with this institution, that says to me there's something fundamentally different about a credit union versus a bank. So for the sake of everyone, myself included, what is a credit union and how is it different than a bank?
If you pull up to your local credit union branch and walk in, you'll see ATMs, you'll see a loan officer, you'll see a teller line, you get a credit card, and it looks similar. Mm-hmm. What's different is the underlying structure. What a credit union is, when you really look at it and dig into it, it's a cooperative financial institution. Just like many other cooperative businesses, a credit union is a cooperative financial institution that is run for the members that support it.
Okay.
And the board of directors is democratically elected by the members to run the financial institution. The great thing about working with a credit union is you can think much more the long game, where many of my banker friends think on the short game because they're worried about those earnings this quarter, hitting the loan growth numbers, worrying about mergers and moving around. Credit unions, a lot of that, if I went to a bank, I'd probably get fired in a week. Because really, we're focused on building those relationships and doing what's right for people. And over the years, credit unions were originally formed for businesses.
Okay.
And what happened was, over the years, they developed into the institutions that many people are familiar with. If I need a car loan, I go to a credit union. If I open my checking account, or my employer has a credit union. And there's been an evolution, and really back in the late 90s is when the law was changed that really opened up what credit unions can do and offer for businesses, and that's when things have started to take off.
Okay. But hold on. I have to understand something fundamentally different. What is different in the structure, or the capital structure, between the two entities that allows you guys to not be concerned with quarterly performance?
Don't get me wrong. We still have to have a well-run financial institution.
Okay.
But we're not, the benefit of our institution, the more money that we make, it basically sits in equity. So what you have to do is either lower your loan rates, or lower the fees that you charge, or declare a dividend. Whereas in the bank, when you're raising capital, that profit is divided among the shareholders. Well, who's the shareholders and the stakeholders in a credit union? It's the people that have the accounts there. So
this is like a mutual insurance company then.
Basically, yep, that's a great example.
Okay. All right, go ahead. All right, that makes sense now. Go ahead. Okay, I didn't know this. This is neat. Go ahead. I'm listening.
So when those profits sit there, you can do a few things with it. You can invest in better quality systems and performances. You can grow the institution. Many credit unions, they'll manage their capital levels by keeping loan rates down, or paying a little bit more on deposits, or a little bit of both. Or maybe they declare a dividend for their members at the end of the year based off of what they don't need. But the money, it doesn't sit in. A mutual insurance company is a very good example. There's federal credit unions, there's state credit unions, but the one key defining factor, defining quality, is the cooperative nature, and they're run by a democratically elected board of directors.
Got it. Okay. So from I guess then products and services perspective, and I think this is why that the confusion exists from a products and services perspective, then you can do the same things. It's just the ownership structure on the back end. Literally who gets to profit from that business activity is different.
Yes.
Got it.
And that's why we can be friendlier in terms of fees and terms and conditions for financing that we offer, because we're looking at it what's best for the membership and not necessarily what's best for the stockholders of that organization.
Got it. Okay. All right. This is interesting indeed. So I guess then the question really becomes, why don't more people have accounts at credit unions then, if that's the case?
Well, believe it or not, 100 million people in America have accounts at credit unions.
Huh.
One out of every 3 people. in America have an account at a credit union. Sometimes, and in my case, dealing with the business community and the real estate investors, they just don't know or don't know to ask. And credit unions are also relatively smaller institutions. We're not there's a handful of what you would consider mega large credit unions.
Mm-hmm.
There's many credit unions, $1 billion up in assets, but your average credit union has $225 million in assets.
Mm-hmm.
So they would be considered community financial institutions for the most part. And there are twice as many credit unions in America as banks.
Huh.
So, but getting the word out there is one of our challenges, because once most people hear our story, in that you can get your financing for residential real estate from this community institution, where many times if you want to go and sit down with the president and talk about your loan, you can. That's a pretty easy sell on my part.
Really?
What do people really want for it? Most people want when you say what do you want a relationship in your financial institution. You want accessibility. You want to talk to somebody. Anybody can just punch in an application online and get an automated response back.
Yeah, no, I'm having a paradigm shift literally in real time right now. Because sometimes I'm thinking about transactions that I know of where like the deal makes sense, but I'm trying to sell it to a person who is just looking at the numbers, and I'm like, you've got to be able to look beyond that sometimes to understand. And I'm running a lot of capital through this institution. There should be some sort of understanding that this is good, but the fact that you're saying you could actually talk to the president is kind of interesting to me.
It's really we obviously, being a federally insured financial institution, we have to make loans that we can get paid back, or we feel pretty confident we have to get paid back.
Right.
What credit unions excel at is the qualitative part of the financing. The numbers are the same for everybody, but we want to hear the story on what's going on. Because, 10% of those deals are slam dunk yeses. 10% of the deals are slam dunk no, I can't help you out. Most people, you have to talk to them and find out what's going on in their business, who they are, what they want to do, what are the goals. And that's where I'm proud to say where we excel.
Okay, so let me ask a couple of questions, because I'm thinking about I'm going to be selfish and think about my own business needs and the business needs of many that are listening to us right now. When it comes to running a real estate portfolio, very specifically, some people tend to do it in a very local sense, but others tend to do it in a distributed, longer distance sense. So to utilize the services of a credit union, does one have to reside or do business in that particular area? Can you guys do loans out of the area? That type of thing.
The answer is yes and no.
Okay.
But most of the time, yes.
Okay.
Credit unions love being regional lenders, but there are credit unions that lend nationwide. I would say 9 out of 10 times you're going to find people who like to lend in their region. Best example, I'm here in suburban Pennsylvania. We do a lot. It seems everybody in Pennsylvania has a vacation rental or a vacation home at the Delaware Shore or Jersey Shore. We do those all day, every day. If somebody comes to me and says, I have a home in Florida, we tend to match them up with one of our partners in Florida, where it makes more sense, where we want to get them as close to ground level as we can, because we think you can make better decisions when you deal with somebody in that region. My company is owned by 10 credit unions, and we deal with dozens of credit unions. So we're helping. If you have to go around to all these different credit unions and try to find out what they're doing and how you're doing it, candidly, it can get a little frustrating. That's where our company MBFS is essentially an aggregator for the credit union industry. Now, if somebody comes to me and has a loan relationship where maybe I don't have a credit union, this morning I had 2 calls where that was just the case, and I matched them up with other companies like myself that have credit union relationships in their region on who's lending and what's a good fit for your lending portfolio.
Got it. So, okay, then let me ask this question. And so in that situation, when you were actually doing that referral piece, I'm assuming the originating institution still benefits. So while so does the originating institution still benefit?
Oh, certainly.
Okay, got it. And then do you guys still service your own loans, or does that end up going out to the market too? Hello there, entrepreneur. This is Jay Massey. I know that if you've ever gone over to the site, cashflowdiary.com, you may have asked yourself, where on earth do you get a domain name from? Especially as you are beginning to build your bigger, better, badder business, you need a web presence. You need the email address. You need a way for people to contact you electronically so that you can stop doing the @gmail.com game. Well, the good folks over at GoDaddy have definitely supplied us with every domain that we have ever used. So what I want you to do is I want you to go over to trygodaddy.com/Cashflow Diary. Again, that's trygodaddy.com/Cashflow Diary, because it's a quick way for you to get set up to capture your domain name the exact way that you want it. They got easy search functions, and most importantly for you is that you'll be up and running today. As I said, once you get started, stay started. Don't let small little obstacles of how to get your own domain name going stop you. So again, go to trygodaddy.com/Cashflow Diary, and let's get back to the rest of the story.
No, everything that we do, everything that a credit union does in-house is internal in their portfolio. They're lending off of their money. And what we actually do too, remember I mentioned your average credit union is $225 million in assets. Credit unions love to cooperate with one another. Just like it's a cooperative financial institution, it's very much a cooperative industry. So let's say your business grows and you have $30 million in financing. Well, the number of credit unions that can handle that internally, I can count on one hand. Most of the time, they're working cooperatively with other credit unions to pull their resources together to finance those loans. And that works wonderfully. Quite frankly, you never know the difference, and most of the time, you won't even know that your loan is participated out.
Got it. So then, I mean, it sounds like your cost structure is going to be lower, your overhead is going to be lower. It sounds like a lot of things that are traditionally associated with a large financial institution in terms of, well, that's why they pay so little, and the interest rates are so high, that are just not the same for you.
Exactly. Credit unions keep their costs in line for the benefit of their memberships so they can lend out the money at good rates and good terms. And everybody knows that they can go down to their local credit union and get a car loan. Many people aren't aware that their credit union members have business and real estate investment needs, and credit unions are a great source of that. Last year, credit unions did over $25 billion in commercial and business loans throughout our industry.
So, go ahead. Yeah.
Together, it's now over $80 billion in commercial loans, business loans, and residential real estate loans that they hold.
So when it comes to that same, the $250,000 of insurance per account, if you guys are so cooperative, wouldn't it make sense that if I was in a situation to, spread it amongst a bunch of your family credit unions?
Exactly. Federal insurance is federal insurance. We're insured just like a bank, and our government insurance is just as good, and the same thing as the bank's deposit insurance. So your money's not at risk by putting it within one of your local credit unions.
This is okay, and so if everything's the same, this sounds like it's like I think I'm beginning to understand. You're like, everything's the same, just people don't know. That's why we're not benefiting from it. So have you guys ever done sort of, I'm just curious, some sort of comparison analysis, like if you had your, I don't know, $100,000 here at this particular institution versus a credit union, here would have been the differences of what we could have done for you? Is there anything like that?
Oh, there are. We have trade associations, and the benefit of keeping it at a credit union is generally a couple $100 a year if you were to put everything in your credit union, just in terms of the cost structure and fees, and you're getting a little more in rates. You're paying a little bit less on your loans and the fees that you pay.
Got it. Okay.
So there's a pretty good value in the credit union membership. And more importantly, I mean, the value that I see too is just like I said, in that you could go in and talk to somebody who will walk through your loan with you and talk and get to understand the relationship rather than just spitting it through the underwriting tool and saying, yes, no, get out.
Right. So what is it then? What drew you to the industry? Because again, when you choose to become an entrepreneur, you could have done like anything. Why did you go from, like I said, football? Anyway, that transition, and then you go, okay, I'm gonna do the credit union thing. What was inspiring about that for you?
It was a little bit of a journey, and one of the pieces that came together is I was a small town blue collar guy at heart. Mm-hmm. And I was tending to getting into the financial world. I had a couple jobs, and I really liked the community financial institutions. And what I found is that the community financial institutions, the First National Bank of your local town on Main Street is going away. The community bank of 25, 30 years ago, where the local banker sponsored all the local Little League teams and was at the local Chamber of Commerce, there's a lot fewer of them. There was getting to that aggregate, everybody's bank merges how often. And I didn't want to go on that merry-go-round. And then when I started to look around, I said, this is what I wanted to do. And really specifically focused on the credit unions as a career path because their value system is my value system and background.
Got it. I get that. Because there's something to be able to create a business around, well, just what you value, because it doesn't feel so much like work. So let's get a little creative for a second. I get the idea that you can do the real estate loans, etc. Is there anything in a real estate loans perspective that maybe you guys can do or that you haven't been able to do in the past that you can do today?
Under the real estate side, no. We can get pretty creative. And keep it in mind, we work in a lot of different markets. So I do $40,000 rental properties in a small town. And we were just working on a $30 million commercial real estate deal in New Jersey.
Okay. Wow.
So, and the answer is everything in between.
Got it. So go ahead. Yeah, go ahead.
Do I want to build a skyscraper on Fifth Ave in Manhattan? No, that's probably a little bit out of our comfort zone. Do we do some pretty large and sophisticated credits all throughout America as an industry? Absolutely. So we deal with your individual investors. We deal with larger, sophisticated investors. Some center city properties, some small town properties. And credit unions used to be limited in terms of their commercial real estate portfolio. When they first started up, it was limited to 12.25% of your assets. And that kind of created some barriers because you could have a great program, but could only be maybe 10% of the credit union. And last year, Congress actually passed a law that exempted residential investment properties, anything that's a 1 to 4 family unit. They exempted that from our lending limits. So cool. We've really been opened up in terms of how we can do and what we can do for people interested in residential rental properties.
So I guess what you're saying is that if the institution had $225 million of assets, you were previously limited to somewhere near about, sounds like about $30 million or so.
Yep.
But now that $30 million limit, while still in effect or what have you, the small 1 to 4 units no longer count towards that.
Exactly. Anything that's a 1 to 4 family unit doesn't count towards our cap. So it's really opened up our marketplace in terms of how much we can lend.
Right.
And even in those other limits, what I do as a company is that's where we actually help credit unions co-op together to increase their lending capacity.
But why is there a limit anyway?
Well, that you'd have to ask your local banking lobbyist.
I see. Got it.
Yeah.
Got it. Totally understood. So now when it gets to, there's something you said though that I want to dig into because I think there's an opportunity here. When you say that you want to know the story, that gets me excited because that means I can be more creative with the type of deal that we're working with. One of the things that we do here is we run a portfolio of short-term rentals, and a lot of our students do the exact same thing. And in our system, we teach, it's 3 phases. You start out by renting them. You just get 1, then you get like 10, maybe 15, 20, and you just keep building to the point to where you start to have capital, free cash flow on a monthly, quarterly basis to be able to then purchase either the building that you've been operating in or another building and operate it that way. If you guys are open to the story, it sounds like then there's room for more creative structures when it comes to running or financing a short-term rental as opposed to a traditional rental as an investment property.
Exactly. We want to know that our borrower, your client, that knows what they're doing and can manage this property in the growth of the organization and have controls over the cash flow, and they're in good markets and they're following the local laws and regulations. And we want to know that. And the more comfort level we have with that, the more we can help grow them and look at cross-collateralizing properties to pull equity out from one to the other and really become a source for them where it's win-win for both of us.
Got it. Now, in that situation, are you, and I just don't know what I don't know, but I'm assuming you would have some of the same capabilities as either doing non-recourse loans as well, or no?
Most of what you see in the credit union space is recourse lending with a personal guarantee. We do have the ability to do non-recourse lending. Usually that's our larger portfolios and kind of the top tier because we like to give people the best rates and terms they can. So most your everyday real estate investor, it's a personal guarantee with recourse lending, but we do some non-recourse lending.
Understood. And so I guess in essence, what I'm saying is if I was looking to purchase a building that I was going to use, and I keep saying the word building because I'm a multifamily guy at heart, so it's always, a number of units in a building. That's just how I think about it. But if I was going to purchase a building and then use that particular building, those 5, 6, 7, 8, 10 units, 20 units, what have you, as a short-term rental, you're saying that you're a potential financing outlet for that?
We love those. We do them all day. residential rentals are about a third of our business. Our credit unions love it because it's good for the people renting. It's good for the community, and it strengthens their members. And it's good for them, and it's good for you.
Got it. So when I've been out there looking at the capital markets, trying to figure out where where we were going to get financing from, we've always had challenges when it comes to the valuation and or what they'll give us credit for in terms of the valuation and NOIs. How do you guys handle that with things like, obviously, because one of the reasons we run the business is because it generates significantly more income. But yes, we have a number of other things to consider between the transient occupancy taxes and our cleaning fees and everything else that we're, running. How do you guys look at that?
We really go off of the value of the property as it appraises for today. And a large portion of that considers your business and how you're running it. And we have seen, in my area, we see properties that are leased and available for short-term rentals in the Pocono Mountains in Northeast Pennsylvania is a great example. You get a higher value as opposed to doing it for just a 12-month lease. So we do consider the income approach to the property in the valuations.
You have no idea how excited you just made a whole lot of people right now, Mark. Because that is not something we're easily finding right now in the marketplace. Is most of the time when we have this conversation, at this exact moment, it becomes, we'll just give you credit for 80% of market rent. It's like that's not fair. We want credit for the value we're creating, and that's what you're saying is possible.
And I'll give you a great example that we do on a regular basis. We finance a lot of homes on the Jersey Shore and in Delaware. And that is, you have a lot of rentals, short-term rentals, and that is the market. And that's where we look at it as we're not taking the rent based off of, on a 12-month lease for a family of four would be. We're looking at it off of that business model on a short-term rental basis.
Whoa. Hold on. Are you saying you're doing this even on properties that are less than 1 to 4 units? You're saying you're doing it, you're giving them credit for the rent on even those?
Oh, sure.
Oh, wow. You just became a unicorn.
We, and credit unions all across America are looking at 1 to 4 family units off of the income that the property can receive. We obviously we have to make good credit decisions. If you tell me you bought it for $80,000 and you say it's now worth $500,000, we're gonna have a conversation.
Yes.
But if you finance a property, if you establish an LLC for your 1 to 4 family unit property, we do that. Credit unions love that financing, and we have a whole network of credit unions who want to help people with their rental property needs.
Okay, well, here's what I know. At this moment, there's a lot of people who have listened this far, and if they weren't excited, they're really excited right now. What's going to be the best way for them to catch up with you, find out more about what you guys are doing? Because because you've said things that I was not expecting to hear, and I know that the same thing happened for them, and they're going to want to find out more information.
Sure. The best place to connect with us and where we can start the process of talking to you and hooking you up with a credit union loan is mbfs.org. That's maryboyfranksam.org. We also have a good presence on LinkedIn where people can search Member Business Financial Services on LinkedIn or connect with myself on LinkedIn. But our website is a great start.
Awesome. So as we wind down, I've got a final question for you because I'm curious to hear your answer. I know that, for people listening, they're at various stages of their business. And in fact, there's someone, especially because of some of the things that you said, that they have drawn that proverbial line in the sand. They probably were saying to themselves before they were listening to this particular episode, they said, you know what, I would do X, Y, and Z. I would be in real estate. I would do short-term rentals. I would build the business if I just could find the money. And you may have just presented a potential answer for them. So now they're at that precipice of decision, right? You know, they're looking over that ledge going, oh my gosh, am I actually going to jump? So, and you know, like I know, that at the moment we're at those moments, we have a companion, and that companion comes in the form of a voice. And it's a voice that reminds us of typically how it didn't work last time, why it might not work this time. And are you're going to be the one to actually start a credit union? You're going to do what? No, that not you. I know you. You're from a small town. Small town people don't do that. That's what that voice says. And for some people, they're related to that voice. So my question to you is as follows. Let's pretend that this time it's going to be different. This time they're going to follow through. They're going to do exactly what you suggest. 100%. And they're going to do so in the next 24 to 48 hours. What would you suggest that they do?
Follow your dreams. Don't do it for the money, but do it to fulfill, make the life goal, the life plans. There's always a reason to say no to something. Make a reason to say yes. And building your own business, whether it be an auto body shop, or a dentist, or a residential rental property business, is a great way to build and take control of your own destiny. I know, like I said, 100 million people belong to credit unions today. So a lot of people who are listening today are members of credit unions. You just may not have known they were an option to help you out. For those 2/3 that maybe aren't members of a credit union, it's that financial institution that you've been telling us you've been looking for, that community-based financial institution where you can talk to somebody.
Yeah, I like it 100%. I definitely appreciate everything that you guys are doing, and I'm glad that we get to help and assist and spread this message. So I just want to be the first to say thanks for taking the time to share your knowledge, your wisdom, and your insight here with us today at the Cashflow Diary, sir.
Thank you for having me.
All right, ladies and gentlemen, you know what time it is. It's time for you to move at the speed of instruction. What does that mean? That means get over to mbfs.org. Get on LinkedIn. Figure it out. Make the connection, because you were looking for an answer, and I know that there was a lot of you who just heard what you needed to hear. So the next step is 100% yours. In fact, the only way to guarantee a no is to do nothing. So at least go find something out. You just never know where this thread, this path may lead, because they're being very creative. You're very creative, and it's time to bring your creation into an existence. Ladies and gentlemen, it's been fun talking to you today. I look forward to talking to you soon. Until next time.